Have you ever stopped to wonder what really makes the biggest brands in the world tick? Well, today, we are digging deep into the engine behind McDonald's to see what's actually going on.
Yep, we're going behind those iconic golden arches to really deconstruct what powers this global giant. And how are we going to do that? We've got the company's own playbook, its 2024 annual report.
I mean, the sheer scale of McDonald's is it's almost hard to wrap your head around. We are talking about nearly 44,000 restaurants spread out across more than 100 countries. It is a massive, massive global footprint.
But here's the thing. The real key to understanding this company isn't the burgers, and it's not even its incredible size. It's this number, 95%. The fact that 95% of those restaurants are franchised, well, that one detail defines their entire business model.
So what does it actually mean to be 95% franchised? Okay, let's dive right into that.
So here's the deal. For the most part, McDonald's, the corporation, owns the land and the building. Then, independent operators, the franchisees, come in and pay for everything inside. In return, they pay rent and a percentage of their sales back to corporate. This creates these incredibly stable, predictable streams of revenue. It makes McDonald's just as much of a real estate empire as it is a restaurant chain.
You can kind of think of a company's 10K report like its annual checkup with the doctor. And after a few years of really strong performance for McDonald's, the 2024 results, well, they are pretty revealing. And here it is. This is the big number that got everyone's attention. After years of really solid growth, global sales from restaurants that have been open at least a year were basically flat. I know, a tiny dip, right? But for a company this size, even a tiny decrease is a major headline.
So the big question is, why?
What happened?
Well, according to the report, it was basically a perfect storm of challenges hitting the business from all sides.
And the report is pretty direct about the causes. Geopolitical conflict in the Middle East continued to hurt sales. Then you've got key markets like China and France, both seeing sales go down. And on top of all that, you have customers everywhere just being a little more careful with their money, or as the report puts it, more discerning.
But here's where that franchise model really shows its power. Despite the flat sales, just look at this chart. The margins from franchised restaurants, we're talking over $13 billion, absolutely dwarf the margins from the few stores the company owns itself. That is that stability we were talking about, right there in action.
So, with that rock-solid financial foundation humming along in the background, how does McDonald's plan to deal with these challenges and get back to growth? Well, the answer is in their official strategy, and it's got a pretty catchy name. They call it Accelerating the Arches. It's basically the company's MCD playbook for how they're going to win in this really challenging new environment. The whole strategy is built on 3 pillars. First, maximize marketing, creating ads and campaigns that connect with the culture. Second, commit to the core, which means focusing on the classics people love, like the Big Mac and McNuggets. And third, double down on the 4 Ds. And this one's all about pushing their biggest advantages.
But really, it's that third pillar, the 4 Ds, where you can see the company is making its biggest, most important bets for the future.
So the 4 Ds are digital, delivery, drive-thru, and development. You see the theme, right? It's all about making the McDonald's experience faster and more convenient, whether you're ordering on the app, getting food delivered, or hitting up their world-class drive-thru.
And if you want proof of how serious they are about that last D, development, just look at where the money's going. Over $1.5 billion, the biggest single piece of their spending, is going straight into building new restaurants to grab future customers.
And this big push on development, it's not just a short-term fix. Nope. This is part of an incredibly ambitious long-term goal.
50,000. That is the number of restaurants McDonald's is targeting worldwide by the end of 2027. And to put that into perspective, the report says this would be the fastest period of growth in the company's entire history. That's just wild.
But it's not just about building more stores. They're matching that physical expansion with a massive digital one. At the same time, they're aiming to grow their active loyalty member base to 250 million people.
And here's why that matters. This isn't just about collecting users on an app. The real prize is turning that loyalty into revenue. We're talking $45 billion in annual sales coming directly from that massive loyalty base.
So, the strategy is crystal clear. Grow bigger, grow faster, and be more convenient than anyone else. But you have to wonder, in a world with changing tastes, a shaky economy, and tons of competition, will betting everything on sheer speed and scale be enough to win the future of food?